because it's like the more jobs that you get done in a quality manner, of course, the more you get paid.
I love bookkeeping.
Hi, everyone, and thank you for listening to the I Love Bookkeeping podcast. My name is Hannah Robinson.
And I'm Melissa Honan.
And thank you for tuning in. Don't forget to subscribe so you don't miss a new episode out every Tuesday and Thursday. Today, we're going to be continuing our How to Hire series, and we're going to do a quick episode diving into hourly versus flat rate when it comes to hiring. Just to dive right in, I feel like it's no two jobs are the same or no two situations are the same. So what are some of the things that like constitute hourly versus flat rate pay?
That's a great question. I would also say no two states are the same. I mean, I'm sure tons of states are the same, but that is a big play here is you have to think about legally, what are you required in your state to pay, depending on if this is a subcontractor versus an employee. Do they need to track their time? Do they not? So definitely check your state laws, guys. California, y'all know you're a pain in the butt. There's quite a few others as well. So I think you're right with the no two job is the same. I would say that, a lot of bookkeeping business owners that are just getting started with delegation, that first handoff is going to be, an executive assistant or a bookkeeping specialist. And when I first started subcontracting bookkeeping, we did subcontract out hourly because I was trying to train subcontractors to move them into employee positions. But man, did I get burnt on this one, guys. I've seen everything. I've had bookkeepers spend 35 hours on an account that had a 4-hour average production rate because they were just that committed to learning the client. I've seen just all sorts of stuff. It just does not work out. I highly recommend flat rate for bookkeeping subcontractors and for any new project, really.
Interesting. I feel like every situation, and obviously state we just mentioned, but every situation and job kind of calls for different pay scales. I can, it's something separate from bookkeeping that I've kind of dealt with, I guess, have experience dealing with. My boyfriend, he manufactures artificial turf. And when these guys do turf jobs, they get paid per job so that they will hurry up and get the job done. So I thought that was kind of cool because it's like the more jobs that you get done in a quality manner, of course, the more you get paid instead of hourly. That's actually a way to make more money. So is that kind of how you view it?
Yes, that is exactly. And so, especially over time is that if I'm paying you hourly and you just start and it's taking you 10 hours to do the job and say I'm paying you $200, so you're making $20 an hour. That's still a fair rate. You're still above minimum wage. So I'm covering any, state requirements for that. But then the second month, you've gotten a little bit more efficient. You know the client better. Now it's taking you 9 hours. 6 months later, it's taking you 5 hours to do the same client. Your quality is exceptional. You're just you're in efficiency mode now. You're now making $40 an hour on that client. And I think that it's the most fair for the business and also for the bookkeeper to have a set rate that you both agree upon. Now, you can always renegotiate. So say you agree to a flat rate and the production rate comes in higher than estimated. You can always reach out and say, hey guys, you told me that the production rate would be 8 to 10 hours. This is coming in closer to 15. I'd like to talk to you about increasing this flat rate. I believe that the production rate was off because maybe you didn't realize that there is, a significant payroll journal entries that need to be completed. Hey, they had a few extra assets and a few extra bank accounts that you didn't know about, these types of things, right? But I think going in and saying it's going to be $200 flat rate, the expectation is set, right? Versus if I say, okay, I'm signing you up for this account. My budget is, to get this done in 10 hours. And you come back in 20, I'm now 2 times over budget. I don't know if it's you, if it's me, or what it is, but that adds up really quickly, because if we're talking about 100 accounts coming in over budget, no one's making money.
That makes the most sense to me as well, because I feel like, just like what you said, like time can change and the quality of your work can increase. So I think getting the job done warrants a flat rate versus hourly, especially when it comes to bookkeeping. Again, every job is different. But I kind of am team flat rate when it comes to that. Now, and I hope you don't mind me asking for transparency here, are your employees hired? Are they salaried, flat rate, or hourly? Because I know everyone's different with the way they pay their employees.
Yeah. So our subcontractors are flat rate. For employees, it depends on the position. If they're full-time, they're salaried. Not all are salaried. We have moved to an hourly rate for newer employees coming on board first. If they're part-time, they're hourly. Part-time and full-time are eligible for all of our same benefits, though. We don't discriminate the benefits that we offer depending on part-time or full-time. I have so many great employees that their full-time is 80 hours because the other days of the week they're with their kids. And so for us, we don't see that as, oh, they're just part-time, they could work more. No, they couldn't, because they're with their children the other half of the week. To me, you are at your full-time capacity. So I'm going to give you the same benefits. The reason why we moved away, well, I guess the reason why we started with salary is the way that I saw it is that I didn't want my full-time employees to be concerned about getting their hours in so that they could pay their bills. I wanted them to focus on doing a good job. Where we're moving into hourly now is the same thing. I don't want them to have to ride the clock. However, we were finding a discrepancy in what we considered a full capacity and what they considered a full capacity. And a few of our account managers are not at capacity. And we needed to adjust, accordingly. And so, we've moved them to hourly. That being said, we have no issue with people being on salary. I have some people where it's just that is the difference between them being comfortable or not. Like, and I don't have to worry about, for instance, like, Holly, my director of bookkeeping, is the most efficient person in the world. I don't think I've ever looked at her time clock. I'm like, I don't care how much you're working. You're obviously getting the job done, and she's salaried. There's some months where she works a little bit less. Some months she works a little bit more. I'm not going to micromanage her. I think for me, again, but I've worked with her for like 4 years now. So for me, we moved to hourly so that newer employees can earn my trust to get to where, I am with Holly. If that makes sense. Like, so we've gone back and forth. Yeah. As we've grown.
So, it's also interesting with hourly pay. Something that I've noticed is it fluctuates depending on the economy. I've noticed, and that can become like, I think it can become a really competitive environment when it comes to hiring. I know for all industries, especially during the pandemic, it was such a weird time when things were reopening, hourly rates were just exorbitant because they wanted people to come back to work. And now we're kind of starting to see them go back down a little bit. And there's definitely trends when it comes to hourly rates, and that can be kind of hard to keep up with.
Today's show is brought to you by Keeper, the one app to run your bookkeeping business. Keeper helps you get faster client responses with your own custom branded QuickBooks integrated client portal. Finally, you can say goodbye to those pesky spreadsheets full of uncategorized transactions. Keeper also helps you catch those embarrassing coding errors before your clients do. And with Keeper, you can generate beautiful custom reports that your clients will absolutely love to read. To find out more, go to keeper.app. That's keeper.app. Mention I Love Bookkeeping to get 20% off your first 3 months. Again, go to keeper.app to find out more. Thank you for listening.
I actually have a candidate that I just offered a position to, and they had a great question about, what do we do to keep our employees during, a potential upcoming recession? Like, what have we done to to keep job security, right? Like, such a good question. And so I will say for our rates don't fluctuate depending on the state. I've been very focused on having like a consistent pay structure, where for this position, this is the starting rate. If you have this certification, this is the rate. If you have this certification, this is the rate. But overall, it is very like transparent. So like everybody makes this dollar, this dollar, this dollar at these different rates. And for me, it's going to be that regardless of whether we're if I have candidates that will accept less or not, I'm going to offer that same amount. And I think that's the fair thing to do, is to not take advantage of the job market and pay less for a job that really does, require a higher pay rate, even if, the market's in my favor personally. But that's just me.
Yeah. So I think you just said something really profound, and I don't think you meant to, but I think when it comes, I think when it comes to pay and being transparent, you're so right about consistency. There's nothing worse than being in a workplace where there's lots of chatter going on about inconsistencies in pay. I think one of the most important things when it comes to paying your employees or your subcontractors is consistency and transparency. And that's something that I think is possibly overlooked, but goes such a long way. And that's why I think it's so important to really be grounded in the system in which you pay people, because ultimately people want consistency. People want that security that they're going to be paid this amount consistently until this date.
Yeah.
Or until something changes.
We've changed things over time. So but I'm getting to where I'm finally kind of working things out. Like, some people came in at a higher rate than others based on when they were hired, because we didn't realize what the job was at the time, right? Those types of things. But we have budget projections through the end of the year to get people up with, end of year increases. We also are, and I know this is kind of goes beyond hourly versus flat rate, but we're also increasing our continuing education bonuses as well, for the same reason, where I want people to be motivated to do continuing education just because they like continuing education. But I also feel like that commitment warrants a bonus as well. So we have a large push for this year to get people enrolled agent status, but also by the end of the year, every single bookkeeping specialist that works for us will be required to have QuickBooks Pro Advisor Advanced. But we're going to give all of our current bookkeeping specialists a bonus for doing that as well. So I think that's something where, hourly versus flat rate is one thing, but also, what additional benefits can you offer depending on how much you can pay? So there's always other options to kind of sweeten the deal, right? So say maybe somebody comes in and they want $30 an hour. You can't afford $30 an hour for this position. You can only offer $25, but maybe you can offer $25 an hour and paid holidays, or $25 an hour and you can offer $100 a month self-care reimbursement. Think about, how you can creatively get your full package up to where it's worth $30 an hour, but maybe it's not costing you as much.
Yeah. So what are, you just mentioned that you've changed your method and your system a few times. What are some mistakes that you made that you could share that maybe other people could avoid?
Tons. Giving brand new people hourly positions for bookkeeping. That was the one I mentioned earlier. Man, we paid a lot of money for that. But I would say not having clear expectations for a pathway to increase their wage over time. What I've been doing for when somebody comes in at like a higher skill rate, you still have to be skeptical, right? That they might not be a good fit for you. So it's going to be kind of hard to go in and just offer them a premium rate. So what I've been doing is like a 90-day pathway in the offer where it's like, this is your starting rate. At 30 days, this will be your rate. once you have achieved this metric, this will be your rate. And then once you've achieved this other metric, this will be your rate. So if they say, okay, I want to make $30 an hour, I'm like, oof, that's going to be really hard for us right off the bat. I typically don't hire anybody in higher than $25 an hour to start. I will offer them $25 an hour and then set 3 different benchmarks for getting them over to $30 an hour within like a 90-day to like maybe like 180-day window, depending on what the amount is. So, and I'm just like throwing random numbers out there, guys. So, I'm not talking like an exact specifics, but that, that kind of, again, depending on, the other options too is like, okay, well, I can offer you $25 an hour. And we can pay you out a $500 signing bonus. Things like that, where it's like, okay, a one-time boost, even though it's like a slightly lower hourly or whatever it might be. So I think the big change I think I've made is creativity with, what I can afford. And instead of just saying, okay, I can't afford to pay them, I'm just not going to make them an offer. I just throw out what I can offer, right? Like, it's like, okay, this is what I can afford. I'm going to put it out there because if I don't, the answer is going to be no.
So you almost incentivize it.
Yeah. Like, there's different ways. And plus, like, we do, because what people might not understand too, especially if those are new to business. So at our level, not only do we have like hourly salaried employees, whatever, but we also offer benefits. So we offer, if you're an hourly employee, an hourly full-time employee, we do pay up to 13 paid holidays. We do offer starting at 40 to 80 hours of PTO, whether you're part-time or full-time, upwards of 160 hours of PTO. We offer a simple IRA with up to 3% match. And then we have a QSARA health reimbursement option of up to $297 a month. And then we have a self-care reimbursement of up to $100 a month. And so when you start adding the burden in, our burden is going to be higher than your typical, not offering benefits company. And so that $25 an hour costs us $32. So when you want to make $30, that's going to cost us $36 to $37 an hour when you factor in all the other benefits. So I try to just package it so that they can see, I'm not trying to lowball you. I'm just showing you that this is a comprehensive package, right? This is a full financial package, not just, okay, an hourly rate and you get nothing out of it. We're also offering you these additional benefits as well that are going to be longer term benefits that are going to help you.
I think that's great to offer that and to show the transparency of kind of how far their dollar is going.
Yeah.
If 25 an hour versus 30 an hour, here's how much this is actually costing. And it ends up being about $30+ an hour.
And it ends up being better for them too. If you think about like QSARA health reimbursement, that is not going to be taxed the same to them as income. So that's $300. That's not going to be taxed as income. That can still be used for health insurance. Same with the simple IRA is their contributions in our matching is a way to defer income so that they're not taxed at the same rate. The same thing with the self-care reimbursement. That's $100. That's reimbursed to them, but they're not taxed on as income. So these are things where it's like, this is, I don't want to say it's tax-free income, but it definitely is, a bigger benefit, I think, than just an additional $1 an hour.
Yeah. And that makes sense. We hope you guys have gotten a lot from this episode about flat versus hourly rate, especially if you're kind of just starting out and dipping your toe in the water of hiring. We're kind of doing every topic that you can think of when it comes to hiring and the different aspects of it. So if you guys have comments, questions, or concerns, or there's something else that you want us to talk about in the future when it comes to hiring, please send us a message at hello@ilovebookkeeping.com. Again, that's hello@ilovebookkeeping.com. And don't forget to subscribe. We have a new episode out every Tuesday and Thursday, available on Apple Podcasts, Spotify, and Google Podcasts for Android. My name's Hannah Robinson.
And I'm Melissa Honan.
And thank you for listening to the I Love Bookkeeping podcast.
I love bookkeeping. Here's a little shout to all my friends working hard at keeping the books. You want to change your life, you want to grow that business. Step up your game and see